Hello, and welcome to another episode of the Market Snapshot series. My name is Rufas Kamau, Market Analyst at FXPesa. So thank you for joining the session. So I would like to begin with a mic test. If you can hear me clearly, kindly type hi on the live comment section, and these will confirm that everything is working just fine. So these are quite a busy week. We've started out on a Monday with a very high volatility. It's not something that is usual, but now that we are seeing it happen, basically represents some good trading opportunities. And I'm hoping that the volatility will be sustained over the week. So morning, Lucy, Marcy, and Agnes. Thank you for your responses. So I'll be starting right with what's the major news for the week. And the major news for the week are basically the ECB press conference as well as the interest rate decision. Immediately after that, we'll also be looking at a couple of other things happening in the markets. So let's follow the week right from the beginning. So last week, we had quite a number of things happening all the way through to Friday, where we saw some good volatility happening, especially for the US dollar. Canadian unemployment rate changing to 5.5%, but mostly focused on what happened with China. So the CPI in China had dropped the previous month, basically indicating that China was entering disinflation territory, or basically deflation. So the CPI came in at 0.1% year over year, which is close to zero. And anything below that would basically mean that prices are going down in China. So producer price index, which is basically a measure of forward prices, was down negative 3.0%. So in the previous reading, it was down negative 4.4. So this is a slight improvement, but still within disinflation territory. So now getting into the new week, I'll try and change this here. So we have started with G20 meetings happening on the second day. So they'll be continuing all day. We have the M2 money stock for Japan, which basically remained the same at 2.5%. Chinese new loans up from the previous reading of 346 billion to 1.36 trillion. So this is a big improvement, even higher than the expectation, meaning that there is more happening in China. So the Chinese government is trying to stimulate the economy after seeing the recovery facing some losses that are basically showing that the economy is weakening. So with China trying to stimulate lending, we could be seeing some resumed recovery going forward into the next quarter. So for Japan, preliminary machine tool orders, they were down negative 17.6%. This is slightly lower than the previous reading, which was negative 19.7. Then Italian industrial production came in at negative 0.7%, dropping into the negative territory from the previous reading of 0.5%. So we were expecting a speech from MPC member Peel in the UK. The meeting was supposed to start at 11 a.m. So we have just started the session. I think it's happening at the same time. So we don't have any other expected news for the day, which basically makes the market a price action traders territory. So everything now boils to price action for the rest of the day. We will not be focusing on any major news announcements. So from the Financial News website, we don't have any breaking news currently impacting the markets. So only things we are seeing as highlights include geopolitical movements. For instance, North Korea's leader Kim Jong-un and Putin's summit may take place as soon as Tuesday. So it's also important, I remind you, if there is any crypto traders in the house, that today is the day the FTX decision will be made. So the FTX case is still continuing, and there is a choice to be made whether the company will be forced to liquidate its assets or whether it will be allowed to continue as a going concern. So if the company is forced to liquidate its assets, the key focus is on Solana, which it's holding a huge bag of Solana. So if it was to dump this huge bag in the market, then it would cause a big sell-off. So if you check today's price action on CoinMarketCap, you will already realize that the coin is already selling by a huge margin. So you can see it's already down 8%, and perhaps we could be seeing some further volatility from this one. So besides that, now we look at the week ahead. So tomorrow, being Tuesday, we'll be looking at the UK jobs data. So this will be ranging from the claimant count change, or basically the number of people claiming for unemployment insurance. We'll see the average earnings index, and of course, the unemployment rate from the UK. So on the Euro side, we'll also be looking at the German ZEW economic sentiment, as well as the ZEW economic sentiment for the entire Eurozone. Then on Wednesday, we'll be looking at the GBP from the UK. Most important to see how the economy is growing. As you can see, the expectation for the month is negative 0.2%. Then the most important news of the week will be the US inflation data. So remember when the Fed said that it's changing its policy approach from making projections to basically making a decision that is data dependent. So between their last meeting in July, and the next meeting, which is 20th of this month, they'll be looking at all the data they have collected within that period and using that to make a decision about interest rates. So one of the most important data points is the overall US inflation, because this is what they are trying to control back towards the 2% target. So in the previous reading, there was a big jump from 3.0% to 3.2%. The first time in 1.5 years that inflation went higher. So now on the second month, we're expecting that this inflation is going to rise again. And if there's a big jump of 0.6%, it will affect the overall annual number to 3.6%. So as for core CPI, it's expected to maintain the same level at 0.2% increase, and that's for the month of August. So there is a good chance that this will rumble the markets, cause some good volatility, which would present trading opportunities for traders. So employment change for Australia will be happening on Thursday. ECB decision, main refinancing rate at 4.25%. We don't expect the ECB to change interest rates, but then surprises are always on the table. So we could also see a surprise rate hike from the ECB. And of course, 30 minutes after that, we'll be seeing the ECB press conference. So we also be getting more data from the US, which includes the core producer price index, core retail sales, producer price index, and retail sales before we look at the weekly unemployment claims. So it seems like Thursday will be the most volatile day of the week. We look at Chinese industrial production as well as retail sales and fixed asset investment. Later on, we see the NBS press conference as well as the unemployment rate from China. So there will be a huge data set coming in from China, and this could cause some volatility in the markets. Then as we approach the end of the week, we'll also be looking at the Empire State Manufacturing Index, US import prices month over month, industrial production, and capacity utilization rate before we look at preliminary University of Michigan consumer sentiment, as well as the inflation expectation survey. So knowing that that's what we're expecting, and it's a pretty volatile week, it's also important to know or to note that the dollar index is now beginning to show some signs that it could start weakening, especially after the price action this morning. So remember, last week, we managed to complete the 8th week where the dollar index had consistent gains. So we have had the dollar closing the week higher than the open for 8 consecutive weeks, and now we are starting the 9th week. So the 9th week started with a very strong pullback from the dollar, and as a result of this, we have seen several or numerous opportunities. So one of the key assets that we have been testing out has been USD which managed to fail 3 times to break this level of 147.816. So being unable to break this high, you can see the way the market has been pulling back here. So there is a good chance that we could be seeing further news from USD especially considering that we mentioned last week that around these levels, we risk seeing the Bank of Japan intervening in the currency market. So if this big move from Friday's close to today's open, and then the continued sell-off during the Asian session represents some form of intervention, then we could be in for a long ride downwards. So I'm not sure what this represents, but there is a good chance we'll be seeing some further downside momentum in USDN. So as for the pound, it's recovery week. So last week, we saw the market going down to a key level support. And after we got to that support, we saw the market coming back to the same level, retesting the same area and bouncing on strongly. So from what we are seeing here is a market that basically attempted to go down and failed. So if we were to highlight the last 2 days of price action in pound USD, I would say it was a pretty sideways momentum, and now we have a break towards the upper side. Sorry, trying to do this. Just want to make this as accurate as possible. Yes, so this is the price action from the last 2 days. The market swings to this high and then the low, then gets to the high again twice, and then the low, which is basically sideways momentum. And then today, being Monday, the market opens with a big rally, pulls back, and now seems to be continuing. So there's a good likelihood that we'll be seeing some further upside momentum happening with the pound USD pair after breaking out of this foreign wedge formation. So on a higher time frame, this is how it looks like. So it's a market that was on a big sell-off. This is the same 8 weeks you have seen in the dollar index. So the dollar was also strengthening against the yen. So today, a high likelihood that we could continue seeing prices reversing and perhaps even for the week. So pretty bullish on the pound against the dollar this week after having those 8 straight losing weeks. So it's a similar thing for EURUSD, though the momentum doesn't seem at all that big compared to what we have seen with other pairs. So we have seen strong momentum in USDN, strong momentum in pound USD, but for EURUSD, it doesn't seem to be moving much. But of course, we know it's the ECB week, so volatility for this particular pair will be coming. So for now, what we are looking at here is a market that was basically moving sideways. I would say this is a ranging market for the last 3 days actually. So there's not much of a momentum, which is a common scenario, especially whenever we are approaching the ECB decision. So you might see the market ranging for a while, and then once the ECB decision is announced, then we see a big jump in prices. So for today, I expect the price to be remaining within this yellow rectangle. So USD CAD had a very nice momentum last week on Friday. Today started off very strongly, continuing the same momentum. And if the dollar remains weak and keeps going downwards, then we could be seeing some further downside momentum in USD CAD. So the immediate support for the dollar index is around 104.333. So now that we have just entered the London session, if the common theme of the dollar being weak continues, then we could be seeing these other assets continue to rally. And one of them, in this case, will be the Canadian dollar, which could be continuing to gain against the US dollar. So far, it's rejecting this level. It was acting as resistance, and now support here. So the market attempted to break it, didn't quite get to the next level of 1.35711. So the close of this particular candlestick will be so informative in telling us whether this momentum continues or whether there is a reversal. So the previous 1 hour candlestick is already indicating that there was some form of rejection. So if this closes higher, then it would be a confirmation that this momentum has come to an end and buyers are now moving the prices higher. However, if at the close of the hour, we have, let's say, much lower prices, that is, if the candlestick closes near the open or even below the open, then that would confirm that the bearish momentum continues. So gold is seemingly showing a reversal too. So after making a very strong rally in the Asian session, we have seen a very strong rejection in the previous 1 hour, basically showing that this area here has held its ground. And now prices may be facing downward pressure. So the close of this candlestick will be very important in determining where we go next. So there's a good likelihood that if the candlestick closes lower, then the market goes back to retest today's low. But then if there's a clean break of this area, let's say the candlestick closes lower or in the yellow region, then there will be a case to consider gold continuing to rally to the 1938 price level. So those are the two scenarios. So the close of this candlestick will be very, very important in determining the direction we are taking. So as for AUD/USD, very strong rally after ranging for the last 3 days. So you can see the sideways momentum we have here. And just for comparison purposes, you can also look at the EURUSD and how it's trading. So whenever you see such a kind of consolidation, you know that the break will be strong, just like we have seen with the AUD/USD currency pair. And now that you have a clean break and the market headed higher, it's already getting to a level that we would consider as an exit level. So if you had a buy trade, this is a reasonably very strong resistance level. So if you had a buy, this is where you take your profit. So now from this area, you observe if there are signs of the market pulling back downwards, because it could go back to 0.64, 0.28. And if there's a clean break, then you look for the next resistance. So US equities have opened the week on a strong momentum. So I expect some further upside for the NASDAQ. 15,425 is on focus. Then for S&P 500, we are already breaking previous resistance levels. So if you break this and the market keeps going higher, then we will be looking at the previous high, which is all the way up at 34,890. But then if it fails to break this level, then we'll be considering last week's lows. So as for the US 500, we saw the market breaking this head and shoulder formation, going further back downwards, almost getting to our support of 44.26 before pulling back upwards. Already retested this area here, which was the highest price that we saw on Friday. And now that the market has broken to the upper side, now it remains thesis on whether the market will continue going up. So the immediate target remains 4,501, which is way higher, and this would present a nice trading opportunity. So on another angle, if you think about it creatively, you'd notice that this was an inverted head and shoulder pattern happening on the US 500. When you consider this to be your first shoulder, then back to the neckline, then the head, and then back to the neckline, and the market goes down and forms the other shoulder. So this basically confirms to you that you have an inverted head and shoulder. And now that you have a clean break, there's a high likelihood that the price could rally to 4,500. So oil remains strong, perhaps one of the strongest assets in the market. So after the announcement last week by Russia and Saudi Arabia that they will be extending oil output cuts through, they'll be extending this through to December. Then as a result of this, we saw a very big jump, but then prices have remained relatively sideways since then. So from what we are seeing here, it's basically price moving this way. So it's neither going up or down, but somehow it has maintained this level. So going forward for the rest of the day and perhaps for the rest of the week, there's a high likelihood that we could be seeing a breakout. So judging from the highs and the lows we are seeing here, we are seeing lower highs here, and then the lows are getting higher each time. And this basically presents a possibility that oil might eventually break towards the upper side. So currently trading at $90 per barrel, there's a good chance we could be seeing a break on the upper side. So European equity indices opened the week with a very strong bullish momentum. We saw it happening right after the first couple of hours. And I expect this momentum to continue perhaps for the rest of the day. So that's for French 40 index, the Euro Stocks 50 index also making a good rally all the way up to this resistance. So it remains a key test. And since we don't have any other data points coming in, then all we have to rely on for the day is on the resistance as well as the support levels. So UK 100 seems to be the most bullish equity index this morning with a very big jump all the way to 7,550. But immediately after it got to this resistance, you can see what has happened right after that. So if we happen to take a pullback, we will not be very aggressive because we don't have huge key drivers in the market. So at least the days open will be sufficient to work with as a target until we have more volatility coming in the markets. So that's it for the day. Thank you very much, guys. Let me check on the questions. So the BOJ governor comments made a lot of impact during the Asian session. Yes, I think we had cautioned about this last week on Friday. On Thursday, that going forward, we'll be expecting some form of intervention in Japan. And of course, the Chinese CPI was bound to have some volatility. So a lot of investors were afraid of this. They kept the orders of the market. So that explains why we have big gaps on the beginning of the week. So the orders at the closing of the market on Friday last week are not the same orders on the open of the market today. So morning, Haron. I can see Magera, Dennis, Nancy, and Rachuonyo. Hello, Balozi. I can see Mugaza, Said, Mana, Peter. Thank you guys for joining the session. Today, there's a lot of names and response. I appreciate that. Can you do analysis for gold? I think we've already done that. What kind of interventions does the Bank of Japan do? It's pretty simple. As a result of the monetary policy that they have had since the beginning of COVID, we have seen their currency continue to depreciate against the dollar, and this is it's creating bad outcomes within the economy. So if I just zoom this chart out, you'll notice that from around DEC 2020, this pair was trading at around 104, and now we are looking at 148. So that's more than 44% of slide against the dollar. So as a result, their currency has been promoting exports, but then hurting their imports. So as a result, this is becoming quite a political issue, similar to the way the Kenya shilling has been losing to the dollar. So intervention basically implies the Bank of Japan selling their USDs or US treasuries, and then using this money to buy more Japanese yen off the market and try to strengthen the currency. So from what we are seeing here, there could be some form of intervention. First of all, they start by job warning. They'll be talking about it all over, and they cause some panic before they actually start spending dollars to buy Japanese yen. Good question on Solana. Is it wise to trade it? Definitely. If it's an opportunity, it's an opportunity. You don't leave it hanging. It's free money. So I expect some further downside, but you have to do this with a proper risk management. All right. Thank you, guys. I think I've answered all the questions. So if you missed the analysis on gold, it's available on the session. It's live on YouTube, which basically means that you can replay the whole session at your own comfort. Also, I would like to mention that the newest episode of the Bullish Banter podcast is live, where we talk about trading psychology, market psychology, and how it affects you as a trader. So check it out on the YouTube channel as well as on other podcast platforms, and hopefully you get to gain something from that.